The Lal Street gains for the third week in a row, marking its longest winning streak since December last year. Reliance was the biggest Nifty gainer, rising almost 10% this week, and that too, it was a four-day week. And that's the best performance we've seen from Reliance in 5 years. On this week's edition of the Editors Roundtable, we take stock of the week gone by. We put the spotlight on FII inflows and decode Eternal's fourth quarter performance. More importantly, Eternal's commentary about what lies ahead. I'm Surabhi Upadhyay. With me, Nigel, DSouza and Mangalam, Maloo. Hi, guys. Good afternoon and happy Friday.
Happy Friday. I mean, it's one of those days, right, where the Friday feels like a Monday and a Friday at the same time.
True.
Because
It's a
the Thursday was a
Friday.
holiday. Bad, not bad, nevertheless.
This guy's out for a great week, and he's just waiting to get started with a super weekend.
What's your weekend plan?
Well, weekend's supposed to be good, right? I mean, if you're not in office, you should be having a good time. So that's what's going to be, and then get back to business from Monday. But interesting times for the markets, right? Because April, we were the rank outperformers. Particularly the first 3 weeks. The last week of April, though, we did a relative underperformance. And that Nifty bank unable to get past that 56,000 odd mark, I think that's going to be the next important trigger from here on. But we're not falling apart. We're getting the flow. So pretty okay time.
I was just looking at some data. 12 straight sessions is what FIs have bought in the cash market for. The last time they did that was October, November 2022. So it's been over 3 years since FIs have bought 12 days on a trot. So let's see how Friday comes up.
Absolutely. Well, we have plenty to discuss today, and Ashwini Agrawal is our guest on Editors Roundtable this afternoon. Ashwini, it's a pleasure to have you on. First, tell us, let's start with an opening broad thought. Positive on the market, cautious on the market, or negative on the market?
Hi, good afternoon, Surabhi. Thanks for having me here. I think, I'm struggling to build a big upside case for the market in the short run. Because, the earnings season's turning out to be quite tepid. Economic growth globally is slowing down. And therefore, to build a case to say that the market should go up a lot from here is very, very difficult. Barring the fact that, a lower interest rate regime in India and the fact that, we possibly are somewhat of an outlier in the sense that we benefit from what's going on in the geopolitical trade world. Those are the only two exceptions which are holding things up. Otherwise, even if you look at the earnings, there isn't much to cheer about. Having said this, I don't also see a lot of downside. So the kind of lackluster movement that we've seen in the market this week, barring Reliance, of course, as you mentioned, I think that kind of reflects how I'm feeling also about the market.
Okay. Maybe not too much of a pop. More sideways. That actually brings me to the tally for the week. So let's quickly go over the numbers and this tapering off of the enthusiasm that we're talking about here in India. So how do the numbers look? For the week, the Nifty is up about 1.4%. A large part of that is courtesy Reliance contributing a 9% gain. Otherwise, that number would have looked very, very different. The mid-cap index is up just about 0.4% and the small-cap index has actually declined. It's down about 0.5%. Contrast this with how the world is doing. Let's start with the US markets, and I've taken the last 5 days because we were off for 1 day, so excuse that. Broadly speaking, last 5 days, how has the world done? The Dow is up almost 2%, the S&P is up about 2.1%, the Nasdaq even better, and that's the real story. Is our whole US tech run starting again? Nasdaq up 3.1% for the last 5 days. Look at the other markets. The money's flowing in. Hang Seng has done very well. The Chinese market's up about 2%. The German market is up almost 3%, 2.7 to be more precise. And the Nikkei has surged 4% this week. So it's very, very simple to understand that the rest of the world is playing catch up, and we have taken a bit of a pause. So what are the factors at play, or what are the concerns here? Number one, there's a bit of a tapering in the FPI flows, though for April, by the way, the numbers have turned positive. And we'll talk more about that as we go forward. But net positive, almost 4,200 crores in April. First positive month of flows, the first time this calendar year. But by the end of this week, that cash market positive figure was kind of petering down a little bit. So that's point number one. Number two, what Ashwini also mentioned, earnings are patchy. We're not seeing big positive outliers, big surprises, and huge pops. Companies either are missing estimates on Q4, or Q4 is okay, but they're sounding very cautious about what's coming ahead. And that's not just IT companies or external export-facing companies, even internal or domestic-facing companies. And I'll explain that, with some examples. Look at Shriram Finance. The stock was hammered big time. This week it lost 6-7% after the numbers came out. Bajaj Finance, valuations concerns and, growth concerns kicked in. Eternal, the stock was okay on Friday, but Mangalam will talk more about this. The whole point is, what is this commentary, the competitive intensity, how much longer will we have to deal with losses in some of their businesses? So that was the talking point. Bandhan Bank, Federal Bank, TVS Motors, pretty similar for all of these. There were some outliers, I must point that out. And they included, of course, Reliance itself, which was a good set of numbers, PNB Housing, RBL Bank. So all was not lost. But the point is that it's very volatile and very patchy. And last but not the least, the border situation, the Indo-Pak tensions, that's also center stage. And by the way, this week we saw the biggest rise in defense stocks. Some of the names like Mazgaon and Cochin Shipyard were up 15-20%. Hindustan Aeronautics was up 4-5%. But some of the smaller names, Paras Defense, by the way, has rallied over 30% this week. So this is where the market was very focused in terms of at least sentiment.
You spoke about the earnings being patchy. What was even patchier was the reaction to earnings. Yes, Shriram Finance and Bajaj Twins aside, if you look at something like a Trent, we all knew it was bad numbers. The company reported the numbers. There was a mild beat on the EBITDA. The stock ran up about 3.5%. And then after the next day, it gave up all those gains. Even Zomato, for instance, it was under pressure going into the numbers. Just a day before the numbers saw a bit of a spike. Numbers weren't all that great. Thereafter, it opened lower and then recovered from the lows. And even the FMCG pack, HUL talking about growth over margins. Instead of street cheering that growth, they're worrying about the margins that stock down 4%. But Nestle saw a big move. So it's been all over the place. It's been fairly patchy.
Well, that's right. Let's talk about a little bit more about the FI flows, because it seems that the FIs, they are in love with India yet again. The last couple of months, they've been showing us some love, and that's encouraging, right? So just to rewind first, between October 2024 and, February 2025, the FIs sold $26 billion. That's the kind of outflows that we saw. But in the last 2 months, we have seen some inflows. So in April, they pumped in close to around $230 million approximately. And, in March, that is, beg your pardon, $230 million. And they followed that up with close to around $1 billion in the month of April itself. Why is this important? Because the FI flows, they have turned positive for the first time in the secondary market. Remember, we are looking at these numbers as primary and secondary together. But in the secondary market, this was the first month that we had a buy number in the last 6 months. So 6 months of sell flows in the secondary market, and that turned into a buy. Not just that, India was one of the only markets where you saw FI inflows. You just pull up some of the other markets, whether you pull up South Korea, Indonesia, Brazil, all of them saw outflows in the month of April. And India, well, we were the lone one in there, seeing $1 billion of inflows, so not a small amount coming in there. What are the factors that have played out? Why the FI is falling in love again? Well, in fact, a few factors have played out. One is their holding in the Indian markets had fallen to the lowest levels you've seen in the last many, many years. So earlier in January, it was down to around 17% approximately. So underweight on India, they're looking to turn that around. Trump's tariffs have taken center stage, but India's exports to the US account for just 2% of the GDP. So India is relatively, protected on that front. Next up, the economy is expected to grow at around 6.5% to around 7%. So that's encouraging, and it's a faster clip in comparison to other economies. And the Reserve Bank of India, what a beautiful job they've done, right? A perfect balancing act. Pivoting towards growth, they have infused some liquidity and taken care of the deficit situation that we had. And also they changed their stance. The Indian rupee, well, it's breached the 84-odd mark this week itself. So that as well was the outlier. And finally, earnings are expected to grow in double digits for the next few years. But you need to keep in mind that the first half of this fiscal itself could be a little bit subdued, just going by what we have seen. Ashwini, what do you think? FI is in love, or is it just a fling?
No, I think, on a global perspective, sitting in India is very difficult to make out what's going on everywhere else. But I would think that the US exceptionalism, which drove a lot of savings and capital into the US over the last 4 to 5 years, that sentiment has changed. Even though the Trump tariffs may have been put in abeyance for the time being, I think the world at large is wondering, if that's the only place to invest. And if capital were to come out of the US, that's such a large amount of money that it's a foregone conclusion that some of it would come into India. So I think that's a positive. And like you pointed out, better liquidity, easier liquidity, relatively domestic-driven economy. And I think one more point I would like to add to, Nigel, whatever you laid out very beautifully, the diversity of India. I mean, I think, if you look at several markets like, let's say, for example, Indonesia or Brazil, they tend to be very commodity overweight markets. Whereas if you look at India, it's a very well diversified market and with a lot of domestic consumption plays. So I think that is, again, a very interesting feature about the Indian market. So I'm not surprised we are starting to see some flows. But more importantly, I just hope that there won't be a big disappointment to the 6.5%, 7% real GDP growth
Yes.
that we're talking about. My sense is it's a tad lower, but we'll see how that plays out. As of now, like you said, first half is looking to be really hard, and let's hope that the second half is a lot better.
Okay, all right. Just hold on to that thought, Ashwini. More questions. We want to discuss consumer with you for sure. But before that, let's just try and understand what happened with Eternal, Mangalam. Because when we were discussing this in the morning, the company's commentary about competitive intensity sounded really alarming. And alarming in the sense they're saying that they're willing to forego near-term maybe margins. They have to invest in the business. But the stock actually took it very well.
So very interesting to see how the stock takes it going forward as well. Because one, it is off the highs. And secondly, at lower levels, maybe the street thought that near-term profitability aside, the fact that the company is aggressive on its market share for quick commerce is the right thing to do by the company and not necessarily the stock immediately. So if you're playing for the long term, then this could be one of the opportunities. But all of that in just a bit. Just wanted to explain what exactly is happening with Zomato over the last few quarters, now called Eternal. So the question is, the Eternal bounce back, is the worst over or not? There are two things that play out for Eternal. The first part is the food delivery business that continues to slow down when it comes to the growth part. Quick commerce losses expand and the company is cautious on competition. So if you look at the food delivery gross order value, over the last few quarters, it's been coming down, right? So look at Q4 FY24, it was 28.5%. It's come down all the way down to 16%. And this quarter, the most important part was it was not only down year on year, it was down quarter on quarter as well when it comes to growth. And quarter on quarter, there was a decline out there. And the company has given multiple explanations for that. They've said it's sluggish demand environment. There've been shortage of delivery partners. They've delisted about 19,000 restaurants this quarter. But most interestingly, they said cannibalization of restaurant delivery coming in from quick commerce. Why is that? Because if I can get something packaged in 10 minutes, why should I wait for 20, 25 minutes for it to be delivered to me from a restaurant? So that was something which I found very interesting. And because growth hasn't come by, the contribution margins also for the last couple of quarters have stayed stable. Now, here's what Zomato's thesis was. You grow the food delivery, which is a mature market. You expand its margins, use that cash to fund the losses on Blinkit and keep growing it. Well, that hasn't happened. Why do I say that? Because while Blinkit's gross order value has increased 134%, much higher than what the street was anticipating, quarter on quarter also it's up 21%, its losses have expanded and ballooned. Close to around 178 crore is the EBITDA loss on Blinkit, which was 103 crores in the third quarter, a negative 8 crore in the second quarter itself. It's ballooning. Why is it that it is ballooning? Because one, there is high competition. Secondly, the company is adding a lot more stores. And they've said they will look to grow market share aggressively and won't let short-term profitability goals come in the way. The question is, what happens from here on? And the one data point that I've always been looking at Zomato, even when the stock was at around 45, 50 odd rupees, the one data point that gave everyone a lot more happiness was the cash pile was increasing. But here, for the first time in many quarters, the cash pile has decreased. The company has said they're shutting down Zomato Quick and Everyday. They do not see the path to profitability here, and they may consider first-party inventory in quick commerce once the shareholders' approval comes by. And here's the point I was making on cash. 12,241, 12,539, 10,813. That was then up all the way to 19,235 because of the 8,500 crore cash raise that they did. But between this quarter and this quarter, there has been a reduction in the cash. So that's something I'll be tracking very, very closely going forward as well. Is there any reduction in their cash going forward or not? Because that will tell you whether they have enough firepower to fight this out or not. So the eternal question, whether the bounce back or whether the worst is over or not, the answer lies in their cash balance. Let's ask Ashwini about this. Ashwini, new age businesses, Zomato saw a fall, thereafter a rise, now a new vector of growth coming in, which is also facing a new kind of competition. What do you do with these companies? Because it does not matter what Zomato does or not, because the impact is felt across the board. We have Swiggy and the others as well.
That's right. Very interesting because if you look at 1.5, 2 years ago, it was basically a duopoly in the food delivery business. Now, the driver of value or destruction of value, whichever way you want to think about it, is the quick commerce business. And the quick commerce business doesn't have the two players, it has three players. And I think the jury is still out on whether ONDC enabled Kirana stores can also pull off, a little bit of a magic and get some of the competitive intensity back. So this game on the quick commerce side is not over. And you have three large players slugging it out for market share, and this is the fastest growing piece. So one has to watch this carefully. Having said this, Eternal, and I don't own any shares here. My sense is that they have the cash pile and they have the bandwidth to be able to stay in this game for a long time, and I hope they create value out of it. But it will take some time, especially as the demand for their food service seems to be slowing down.
Ashwini, buying anything else in consumer?
Not really at this point. I've basically been looking at financials because they were beaten down on a 2-3 year basis, relative underperformance. So we had been adding to financials in the portfolio, especially stuff down the market cap curve, some of it in microfinance, some of it in the smaller banks, where valuations are now actually very attractive around book value. The environment there is still a little bit hazy with all the legislative proposals going around in Karnataka and Tamil Nadu and what have you. But my sense is that there's a lot of value there. Obviously, it will take time to play out, but that's the only area where, at least I've been seeing some value of late. Otherwise, not anything in the consumer space for sure.
Okay. All right, we'll take a quick break, but we'll come right back to decode this week's market action in just a bit.